Understanding Net Investment Income Tax (NIIT). The Net Investment Income Tax (NIIT) is a critical component of the U.S. tax structure that affects many individuals earning significant investment income. This article delves into the nuances of the NIIT, including thresholds, calculation methods, implications for estates and trusts, and practical strategies to manage tax liabilities. NIIT thresholds for filing status. The NIIT applies to tax filers whose modified adjusted gross income, MAGI, exceeds specific thresholds. Determining your filing status is crucial as these limits will dictate your tax obligation. Here's a breakdown of the filing thresholds for 2023. Filing status MAGI limit, $. Single $200,000. Head of household $200,000. Married filing separately $125,000. Married filing jointly $250,000. Qualified widow, with dependent $250,000. Understanding MAGI and NII tax application. The NIIT is levied on the lesser of your net investment income, NII, or the amount by which your MAGI exceeds these thresholds. This means careful calculations are necessary to determine your final tax obligation. Estates and trusts, applicability of NIIT. Estates and trusts also fall under the purview of the NIIT. In 2023, they are subject to the tax if they have undistributed NII. Their annual adjusted gross income exceeds $14,450. For 2024, this threshold increases to $15,200. It's noteworthy that non-resident aliens are exempt from this tax unless they opt to be treated as U.S. residents for tax purposes. Investment companies and net investment income. Investment companies calculate NII by taking their total investment income and subtracting operating expenses. This amount is often represented per share, providing shareholders a clear understanding of the dividends they'd be entitled to. For publicly traded companies, NII must be disclosed on their balance sheets, allowing investors to assess financial health and potential earnings accurately. Calculating the NII tax. To compute your NIIT, follow these steps. 1. Identify your net investment income, include income from dividends, interest, capital gains, etc. 2. Adjust for expenses, factor in any relevant fees, such as commissions and brokerage charges. 3. Determine your MAGI. This is calculated by adding back certain deductions and excluded income to your adjusted gross income, AGI. Tax scenarios. Here's how the NIIT applies based on different scenarios. Scenario 1, exceeding MAGI. NII, $25,000. MAGI exceeds the threshold by $30,000. Tax due, 3.8% of $25,000, since it's lower than the excess MAGI. Scenario 2, minor excess over MAGI. NII, $25,000. MAGI exceeds the threshold by $10,000. Tax due, 3.8% of $10,000, as it surpasses the NII. It's crucial to note that the NIIT is in addition to capital gains taxes, so investors face a multi-layered tax burden. Strategies for managing the NII tax. Reducing your NIIT liability is possible through various strategies. Maximize retirement contributions. Contributing to IRAs and 401(k)s can lower your AGI. Charitable contributions. Establishing a charitable trust can mitigate your NII. Tax loss harvesting. Offset gains with losses by carefully timing your investment sales. Filing and paying the NIIT. To effectuate compliance with NIIT. Complete IRS Form 8960 to assess your NIIT liability. Transfer this information to Form 1040 for individuals or Form 1041 for estates and trusts. Example calculation of net investment income. Here's a hypothetical breakdown for better understanding. Selling 100 shares of Apple AAPL at $175 each, $17,500. Selling 50 shares of Netflix NFLX at $170 each, $8,500. Income from corporate bond interest, $2,650. Rental property income, $16,600. Total net investment income calculation. Backslash text, total NII equals 100 times 175 plus 50 times 170 plus 2,650 plus 16,600 is equal to 17,500 plus 8,500 plus 2,650 plus 16,600 is equal to 45,250. This total provides a clear view of how various income sources contribute to your tax liability under the NIIT. Conclusion. The net investment income tax carries significant implications for many taxpayers, particularly those with substantial investment income. Understanding how to calculate, report, and manage this tax is essential for sound financial planning. By employing effective strategies to potentially lower your MAGI and NII, you can mitigate your tax burden and ensure compliance with IRS regulations. Always consider consulting with a tax professional for personalized advice tailored to your unique financial situation.